Welcome. You're watching This Is Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand how the opening action is expected to be. 5 minutes from now, we'll start to get the pre-open rates in the markets as well. The markets stand at the cusp of concluding a non-inspiring and uneventful week, where the Nifty has only been confined to a just 300-point range. Bulls have fought tooth and nail through the week to defend the 22,800 mark on the downside, but there is zero conviction to sustain at any level above 23,000 at this point in time. Even the usual volatility that comes with weekly options expiry was also missing as of yesterday. The gap down did happen, but that was also bought into. However, post that, the Nifty continued to meander around the flat line with no meaningful movement on the either side as of yesterday. In fact, in the last of the last 5 trading sessions, the index has ended with a final tally of just 0.1% or less, but has ended in the red in last 11 out of the last 12 trading sessions. So there is uncertainty around Trump tariff talk, worries about the auto sector, worries over funds moving out of India into China. All of this is keeping the bulls at bay as there is lack of positive triggers into the market to really move higher from here. For the week, the Nifty is absolutely flat, while the Nifty Midcap index is up by 3%. The small cap index is up 2% so far. Both the broader market indices are also poised for the best week since the start of December last year. Now, as far as today's cues are concerned, remember US markets, they fell on weak guidance given by retail giant Walmart, and there are fears of tariffs again. So Walmart says the current year ending January 2026 will be softer, while the impact of tariff is not discounted. Adding to the list of tariffs, Trump also said that he would also announce tariffs on cars, on semiconductors, on chips and medicines in early March as well. So that's likely to keep all the markets again on the edge. Commodity prices were higher. We've actually seen, so the Dow Jones ended with a negative 450 points, S&P down 27 points, Nasdaq down 94 points, Brent crude oil around $76.5 a barrel. We've seen gold at 29.56 dollars an ounce as well. What we've also seen is that the US 10-year bond yield came in at 4.5%, dollar index 106, and dollar versus rupee is now standing at about 86.4. We'll get the fresh levels in a minute from now. So that's as far as the Wall Street and commodities picture and the currency picture is going. As far as the Asian markets are concerned, after a weak handover from Wall Street, the Asian peers also limited upside in the morning trade. So we've seen that the GIFT Nifty futures were trading at 22,866, down 77 odd points. In Asia, Japan's market, Nikkei, for about 0.4% in the early trade. The country's January inflation has increased to 4%, hitting the highest level since January of 2023. So inflationary worries again inching higher. So that's been going to be keeping the markets, afloat. Let's also welcome our guest on board. We have Mayuresh Joshi now, the head of equity research at William O'Neill India, to give us a sense of how is he looking at the market setup now. Morning to you, Mayuresh. Good to be speaking to you. And I want to just understand, a lackluster week is coming to an end with, the bulls and the bears completely in a tug of war. Nifty just stuck in a 300-point range, and the Trump tariff talk continues to be the biggest overhang, and that keeps all the sectors and the markets on the edge. How are you going to be looking forward to the market from here on? Do you see this kind of a situation continuing? And what exactly will be able to pull the markets off this, range-bound trade?
Morning, Sakshi. Yeah, I know it's a frustrating period, right? And what is probably happening in terms of Trump tariffs, the reciprocal tariffs, so on and so forth, I think it will be a calibrated approach as I see it. I think you cannot have excessive tariffs probably put in because everything probably gets hampered. The economies are affected by that, and also the US to a certain extent. So I think it's a rhetoric which should start tapering off in the next few weeks and the next few months as well. We've got a few parameters that we're probably looking at. So 3-4 aspects, actually. One, I think if you look at the spread difference between bond yields and the Nifty earnings yield, that gap has come close to that historical gap of 2% seen in earlier downturns, whether it's 2014, whether it's the COVID crash of 20 or 22 as well. So as that gap is probably getting narrowed down the line, as earnings should start improving, our own sense is that Nifty should start bottoming out over the next few weeks or the next few months. The second aspect that we looked at is the Nifty 500 stocks, and only 15% the entire universe is trading above the 200-day moving average, which has not been seen in the past. So a similar event was seen during the COVID crash in 2014-22, similar instances where after this situation has occurred, the markets probably bottomed out after a few weeks. The dollar index, as you were just mentioning, Sakshi, 105, 106 previous few times, 110 this time round. But the dollar index has broken down its 50 and 21-day moving average, and it's an inverse relation in terms of peaks and troughs that it creates. It's creating a peak at this juncture and coming off. It is an inverse relation with the market, and the markets might actually bottom out and come up. And in our own methodology, Sakshi, I think 22,725 becomes a very important level to hold. We've held that for the last few days. If we see a follow-through day, which is a 1.5% move on the Nifty, our take is for this cycle of the market, we might just actually bottom out. So I think we're remaining a little bit optimistic, but at the same time cautious in terms of sector and stock.
Cautiously optimistic it is as far as Mayuresh goes on the markets and the trajectory. We're already starting to get the opening ticks in the pre-open space at least. 0.3% lower, 22,836 is what we're looking at as far as the Nifty is concerned. Let's look at some of the stocks, heavyweight counters. Let's look at Reliance Industries. Let's look at the usual names that we spot, the IT heavyweights, Infosys, TCS. We'll also look at the banking names. RIL is lower by about 0.5%, 1227 odd levels that can be seen on this one. Let's look at the IT pack and banking space. HDFC Bank is slightly higher. That is a relief, 1694, 0.5% higher, because yesterday we actually saw all these big heavyweights declining in trade. ICICI Bank is lower by 1.4%. So it's a mixed trade when it comes to heavyweight banking space. 2% lower for even Axis Bank. So it could be skewed towards the negative side. Let's look at some of the IT heavyweights. TCS flagged with the positive bias at this point in time. Let's also pull up, say, Wipro for that instance, HCL Tech, and also look at some of the other names within the IT pack as well. And we'll also look at some stocks related to news as well to see how they are reacting. Let's look at Coforge, since we're talking about the IT pack. The company has acquired Excel Trade Inc. for $17.8 million. Let's see if there's an impact of that, 1.5% lower. US FDA inspection for Cipla at the analytical testing facility of Navi Mumbai has had 2 observations noted. Let's see how that one is reacting, 0.7% higher. Ace Constructions, that's going to be in focus. 420 odd crore rupees contract from Ministry of Defense is what it's got. So positive news there. Let's look at that one. Apart from that, we also have Sanofi. Sanofi has acquired a controlling stake in Opella Healthcare. That's again from the Pharma pack that we can actually look at. We also have Senoris Pharmaceuticals that's acquired an ANDA for roflumilast tablets. So again, some approvals coming in for the ANDA. And that's as far as the pharma space is concerned. Let's also look at some of the other stocks within the healthcare pack. Narayana Hrudayalaya, that's laid a foundation for 1,100 bed hospital in Kolkata. So again, positive news from the healthcare pack. Apart from that, NTPC is something that we'll definitely look at. Remember, one of the stocks which has been an outperformance this week in the power space. NTPC Green Energy has signed MOU with Bharat Light and Power. So both NTPC and NTPC Green will be in focus because of that. RVNL, again from the railway pack, it's signed PIA agreement with BSNL for telecom projects. Those are the stocks that you could probably look at. Let's get back to the conversation with Mayuresh to see where is he looking at opportunities in this kind of a market. Mayuresh, like you said, cautiously optimistic. We might just hit the bottom of this consolidative period, and then probably the moment we get something to latch on to, we might see a recovery happening. But when that recovery happens, where do you think promising recovery to start? Because it has to be sustained is what the question is, and therefore looking at that hope that it could be a sustained recovery, are there any pockets that you are already accumulating and adding fresh positions in?
So Sakshi, I think what we're clearly seeing is that domestic themes might actually continue doing well in the backdrop of what is happening globally and with the Trump tariff scare as well. And therefore, I think agrochemicals as a space is coming up very, very sharply in terms of our screeners at Markets with India, both in terms of EPS rating and RS ratings and rankings. And therefore, I think this space, in our opinion, might continue doing well. You've seen a good Rabi sowing that has probably happened. There are La Nina conditions evolving, which means that the next monsoon might be good. And if the next monsoon is good, I think the next Rabi season might be good. So I think agrochemicals or rural theme specifically might continue doing well. And with that aspect, Coromandel International is something that we are liking and holding in our portfolios. Our take is that volumes should sustain the expectations in terms of farm gate prices holding up. Input costs, which have moderated, expected to remain soft, would largely mean that the EBITDA, the absolute EBITDA per ton that they're probably doing should largely improve. And at the same time, I think as the subsidy outstanding starts coming off with a very strong percentage, the working capital cycle in control will also mean that the balance sheet strengths play on the EPS ratings and rankings with very strong institutional holding and a very strong parent pedigree. So I think agrochemicals as a space continue expected to do well. Hospitals as a space, in our opinion, also is where the earnings might just remain very, very stable for the next few quarters. Our take in terms of the asset-light model, followed by a large part of this hospital pool, and the additions that we've probably done in the last few quarters would mean that as these new beds or new hospitals, which probably get added in the last few months, last few quarters as well, achieve some element of maturity, you will see that operating leverage getting played out in terms of balance sheets and core parameters like average revenue per bed, the average length of stay. And because an asset-light model is being followed, leverage should start coming off quite significantly onto their balance sheet. So I think stocks like Max Healthcare, stocks like a Krishna Institute of Medical Sciences is something that we are keeping on our radar. And last but not the least, Sakshi, I think with all that is happening around, the expectations in terms of deposit mobilization should continue to grow at a steady pace for the banking and financial universe. And therefore, I think the credit deposit ratios should achieve large part of sanity in the next few weeks, the next few months as well. Asset quality pressures have been very, very stable, and therefore selective banks and financial services also might do.
Okay, fair point. I also wanted to get a sense on the FMCG space with you, Mayuresh. Why am I asking about this is because remember, we are 20 days post the budget, and we've already seen 14 days of a lower trend on the FMCG index, the longest losing streak on record. And this losing streak has resulted in stocks losing up to 3 lakh crore rupees in market cap as well. Now, why this is also, going to be important to understand is that the budget brought about the biggest news probably for this sector because of that 1 lakh crore rupee extra money that will come into the hands of people. Now, one can probably say that, this money will only come in post April, and therefore one really needs to see a lagged effect on that. But the enthusiasm fizzled out pretty much soon, just about a day or so later. How are you looking at the space right now? In this dip, do you think that one should take a leap ahead and look at some of the stocks before the benefits kick in?
I think that becomes a base case scenario. You're absolutely right about that. But I think what the market is now sensing is that Q3 numbers have been extremely soft for a large part of this universe. And therefore, Q4 will have a continued show in terms of the softness that has got exhibited. You're not going to see a sharp uptick in terms of either volumes going up significantly or pricing remaining in their favor. In fact, if you've probably seen, grammage has got reduced to a large extent. So I'll give you an example. My daughter and my wife, we are all having chocolates yesterday, right? Some of it.
Okay.
The grammage has actually come off, so we could actually make out that you're having far lesser and you're paying the same price. So I think FMCG companies are resorting to these measures to probably protect their margins, and it's understandably so. But again, I think Q1, how the trends evolve is going to be very, very interesting. A large part of the consensus belief is that with the tax cuts that have come through, it will boost consumption, which seems to be a base case scenario. But the markets just want to see Q4 numbers, Q4 commentary. So this sector might just go into a time consolidation as we speak. But yes, I absolutely agree. I think with whatever is happening and all the macro stroke micro triggers, a select few stocks might start coming back in focus as we head into Q.
Okay, fair point. So that's as far as the FMCG names are concerned. Also wanted to get a sense on the entire capital market space. Do you think this space is again garnering a lot of traction? With the stocks like BSE coming back in flavor, Do you think it's time to look at them again? There is hope that NSDL IPO is going to be coming in just a month's time or so. There is, of course, the talk of higher valuation of NSC as well, and that's also pulling up the entire space. So, how are you looking at a fresh? This has been a space which has created a lot of wealth in the past for investors, brokerage houses, capital markets related stocks, fintech players. How are you looking at all of these stocks?
I think this pool should do well because I think
Okay.
ad nausea, I think we've been speaking about this, that it's only 5.5% in terms of total asset ownership as far as equities is concerned, whether
Yeah.
direct or indirect. And therefore, I think as the demat additions keep on growing, as the equity cult keeps on growing, the number of households actually, I think in terms of the higher tax or income bracket, is growing every passing year. And therefore, they will need professional advice, which means your asset managers, AIFs, PMS funds come into focus. Your platforms come into focus. Obviously, with F&O curves, you're seeing a lot more of these discount brokers actually feel the pinch as far as volumes are concerned, but they are having value-added services put in more in terms of additions in terms of accretion that an end investor or customer will get. And therefore, I think this play remains. But my sense is that you need to be a little bit more selective at this juncture. Valuation still a tad bit expensive for a large part of this universe pool. And that is gestating over the next 2 to 3 years, the best of markets to probably come in. So be a little bit careful. I think some stocks can show momentum within these spaces as well. But I think a few of the asset management companies, in my opinion, can be kept on your radar, but it's not an actionable as far as we see it at markets with India. I think you still have to have a wait and watch in terms of sailor levels and sailor bases being created for these stocks as
Okay. One more pocket that I'll discuss with you, and that is the power space. I mean, we've also seen a lot of power moves yesterday as well in this entire power industrial related sector. I mean, NTPC, if we look at, I think it's the best performing stock in this week on the index, and what we've seen is almost what 8% kind of a move right there. How are you looking at a fresh right ahead of the summer season starting? What's the call on power stocks? Do you think this theme may return to glory?
the big picture stays with parks. Actually, no two ways about it. I think the government focus is clearly there. The government intent in terms of having renewable energy to 500 gigawatts over the next 7 years is absolutely laid on the table, and they're doing all possible measures in terms of tendering capital expenditure to probably ensure that these targets are achieved. And therefore, I think whether it's power generators, transmitters, financiers, or the EPC players, I think they will remain in focus. Obviously, with the correction that we've seen, a large part of this pool has also corrected significantly. But what is interesting is that they will come back very, very strongly. Orders will keep on flowing in. Orders will be at decent margins. The operating cash flow, because they will execute well, will continue doing well. The working capital cycle probably will remain under control. And though there is a mixed rating and rankings that we are seeing across these spaces, as you just mentioned, I think a few pockets within these spaces, I think a few of the power generators might continue doing well with the thrust on renewable. A few of the EPC players might continue doing well. A pocket that I've always liked is the FGD players, the flue gas desulfurization players, which is a big theme and a theme which also will resonate in terms of having your carbon emissions in place and adhering to those targets kept by 2030. So I think that is a huge, huge play that we're probably looking at. Smaller hydro projects, I think those are coming back in focus. And therefore, there are select pockets within the space which are probably attractive at this stage.
Okay, fair point. You know what we'll do? We'll also welcome Videsh Panchal, who's joining us to track the technicals for us as well. Warm welcome, Videsh. Good to have you with us. Tell us how you looking at trading the index. I mean, it's been like I was discussing with Mayuresh, an absolutely uninspiring move on the index level over this entire week thus far. Nifty Bank, anything looks good on the point of recovery or no?
Good morning, Sakshi. Good morning, Marush bhai. Good morning to all the viewers. So, Sakshi, for us, for a technical guy, at any given point of time, trade is available in the market because basically, technical guy work with a stop loss. So, I mean, on the long side or a short side, I mean, if you work with a stop loss, even if the indices is down 10% in a day, you have a trade. So, basically, if you want to find a trade, there is a trade. But the
Okay.
sensible part of that is post 2020, post COVID, I think this is the first time where even trader and investor get a good time to rethink about the strategies, to reframe their strategies, to basically look for the portfolio realignment. And this is a time for you know all of us to ensure that whatever mistakes we have done in past, we are not
Yeah.
supposed to repeat in the future. So I think better not to venture into any trades right now unless and until if you're mentally fit in this market. So the first thing which is required for us to understand being a trader or investor is that we need to be mentally fit in this market. Now, as far as the indices are concerned, yes, the recent low is at 22,725 on 17th of February. So the easiest trend as of now is to go ahead with Nifty with a stop of 22,725. The trend reversal level on the upside is 23,807, which is the high of 5th of February. So yes, you can go ahead with taking a trade in Nifty with a stop of 22,725 for the potential target of 23,807, because that is the biggest range which we are playing for the next 1 to 2 months.
Okay, Mitesh, we already have the opening rates 10, 22, 886, 28 points lower, 0.1% lower. Nifty Bank is at 49,220, 113 points lower. So we have a muted start as far as the key benchmarks are concerned, the Nifty and the Nifty Bank. Let's also look at some of the other pockets in the first trade that we are looking at. Let's, for instance, look at how the IT pack is moving flat with a positive bias among the heavyweights. Banking is lower, IT is flat with a negative bias. You have the broader markets also flat in trade. Now with a positive bias on mid cap and small caps, Nifty advances are 923 to 723 declines, so slightly skewed towards the positive side. But large part of the Nifty stocks still lower in trade. Bajaj Auto, M&M. These stocks are again down. Ultratech Cement, BPCL, Dr. Reddy's, Apollo Hospitals, Maruti, heavyweights, they're still down in trade. What's up, however, is L&T, Titan, these kind of stocks that are pulling up in trade today. Even ITC, for that instance, from the FMCG pack that's pulling up, Adani Enterprises, Bajaj Finance. These are the stocks that are on the positive zone. But let's look at some of the interesting stocks that are reacting. Religare is something that you could look at. Remember, the Burman family has taken the entire control, and 5.3% higher is what we are seeing this one at. Within the IT pack, you have TCS, HCL Tech slightly positive on the higher side, supporting the index. But we are seeing further weakness, I think, on the Nifty Bank now, 115 points lower. So opening has been weak with some volatility that continues to take shape. Let's look at the broader indices as well to see what the momentum is as far as the stocks are concerned in the broadest index, the Nifty 500. And let's see if there is any kind of stocks that we can spot for all our viewers there. It's higher, the index is higher. So for sure, let's look at the points there. Okay, we have a lot of stocks here. We have Godfrey Phillips 4.5% higher, ITI 5% higher, Bandhan Bank that's up, LTTS that's up 4% up, APL Apollo that's been actually in focus and up and about, VGuard 3.5% higher, TBO Tech, Star Health, CDSL is up 3%. We were just discussing this space with Mayuresh. Brigade and GSW Energy as some of the other pockets that are up and about, Apple Campus, many of these stocks that are higher in trades today. Let's look at if there is any pocket which is extremely weak in this space as well in the broadest index to get a sense. Well, not too weak, but we have stocks like, say, M&M again, KPIT Tech, Motherson, Radico, Cyient, JBM Auto. These are the spaces that are giving up some kind of gains on the pockets right now. But let's quickly go across to Mitesh again. Mitesh, how do you find the opening? What catches your attention? Mitesh?
So few pockets which are looking pretty interesting in the early trade is first is Astral. If you look at the chart button of Astral at 1406, the stock is trading. I think with a stop of 1370, 1370, one can go long in Astral, looking pretty positive from a short-term viewpoint. 1450, 1470 is the target. Second stock which is looking pretty good is ABFRL, Aditya Fashion Retail. So at 256, that is also looking pretty promising with a stop of 250, 250. One can go long in ABFRL for the intraday potential target of 265, 270. So these are the two stocks which are looking promising in the early few minutes. That is ABFRL and Astral.
Astral and ABFRL. Okay, we'll keep an eye out on these two stocks that one can look at. Coming back to Mayuresh, as well. Mayuresh, anything that you have spotted that looks good, or a pocket stock that stands out for you?
I think we are watching out for Avanti Feeds, Sakshi. Our take is that the budgetary announcements have been very, very supportive for a stock like Avanti Feeds or for the sector as a whole. It's not for the stock in particular, but the sector as a whole. And therefore, I think if you're probably looking at the numbers that have gone by in the previous quarter, Shrimp Feeds EBIT has actually improved quarter on quarter, year on year. What you're also seeing in terms of the exports to the US and the kind of tariffs that you're already paying on seafood export, specifically shrimp exports, is significantly higher than a Vietnam, a China, or an Ecuador. So even if that normalization happens, I think we'll be having a level playing field with currencies having depreciated in the same proportion, which probably gives us that added advantage because of the higher tariffs that you're already paying in terms of our exports. Input costs are now a little bit more stable, specifically the flour prices. Because fish meal and soy meal prices seem to be stable at this juncture. And Ecuador seems to have its issues as far as shrimp exports are concerned. So I think there are a few triggers for this stock.
Okay. Mitesh, I'll also, bring in some stocks and then you can tell us how you are viewing those stocks. First is JSW Energy. Again, the stock is up and about. This is after JP Morgan initiated coverage on the stock with an overweight rating and the target price of 545. How would you look at this one?
So as far as JSW Energy is concerned, Sakshi, the medium-term strong resistance is at 505, 505. So if the daily chart gives a close above 505, it's clear-cut buy. Till then, it is advisable to avoid because the stock likely to spend quality time in consolidation going forward. So the trend reversal level is 505. If we get a close above 505, even for a day, it's a buy with a stop of 480 for the potential target of 570, 620. So yes, 505 one should watch out for. Once it closes above that, then it's advisable to buy the stock.
And what about APL Apollo? How are you looking at that one?
As far as APL Apollo is concerned, if you're looking at two chart patterns, first is hourly chart pattern and second is daily chart pattern. The stock is looking promising. And since last few trading sessions, the deliveries volume is also picking up. So we recommend going long in APL Apollo as of now. Above 1510, there is a strong possibility of the trend reversal. Stock is trading at 1529. So yes, it's a buy with a stop of 1500 for the position target of 1580, 1620.
Okay. So we have JSW Energy and JSW Infra also that's buzzing strongly when, MOFSL has come out with a buy rating and a target price of 330. Both of these are higher. Bandhan Bank is higher in trade, 5.5% because of the CLSA upgrade. APL Apollo is in focus because UBS has a buy rating and a target price of 2000. So these are all the stocks that are reacting positively on the brokerage houses updates as well. Getting back to Mayuresh, also wanted to get a sense, Mayuresh, on the pharma space, particularly with these fresh tariff talks coming into way. I'm talking about how he's going to be including more medicines starting March as well. Is pharma going to be something that is going to be probably at the brink of a knee-jerk negative reaction once that happens? How are you looking at it? Already some signs are coming in.
So I think we'll have to watch out. So I think pharma is one of the biggest export revenue contributors to our economy as well, and specifically US markets, which out of the total pharma exports around 31 to 35%. So I think if that Trump rhetoric plays out, I think one must really understand that outside US, China and India, and specifically India, are where the maximum number of FDA approved facilities are. Yes, there have been issues with a few plants for a few players. But I think if you suddenly have these tariffs coming through, and big ones at that, the cost is going to go significantly higher. So it's not going to be an easy task to do because there are elements where I think if the cost push happens on medicines in terms of certain key specialty drugs that we're probably speaking about, companies will have no other option but to hike prices as well, to probably even take tariffs into account. The generic versions and the off-patent generic versions will still take time. And the sheer volume will also take time. So one must really be cognizant of the fact that it's going to be a time-taking process, and you suddenly can't have large impositions happen. So therefore, I think we remain constructive on the sector as a whole, but we'll all wait out for how this rhetoric probably.
Okay, fair point. Let's also look at some of the other stocks then. Mitesh, I want to get your sense on the mid-cap space. Again, the mid-caps are bouncing. 300 points of a jump already on the mid-cap index. That's come, sharply higher in the initial few minutes of trade. Anything that catches your attention in the mid-cap space particularly?
See, as far as mid-cap space is concerned, Sakshi, as of now, it is advisable to wait and watch because we have seen a very volatile move in the past. So I think it's a bottom formation which is in place right now, but it is too early to say. But as far as certain pockets are concerned, as I said, again, we are extremely bullish in the commodity space. So we like sort of a sugar at this point of time, sugar stocks, we like
Okay.
fertilizer stocks as of now, and we like metal stock as well. So I think these are the three pockets which we are looking at, and we are of the view that once the dust settles and once the volatility is over, probably it is the commodity play which will significantly move up in a period of next 6 to 9 months. So I think all our eyes as of now are on the trend reversal levels of these three sectors: metal, sugar, and fertilizer.
Okay, fair point. I hope this has also given us some sense on how to look at the mid and the small caps. Both are buzzing. In fact, over 1% gains now for the small caps and 0.7% of gains for the mid cap index as well. You know, some of the other pockets in this broader markets are the renewable energy space stocks that are also buzzing in trade today. Suzlon and Irida, these are the kind of stocks that are actually buzzing in trade. Let's get Mayuresh onto the picture. Mayuresh, how would you look at this? We were talking about the pharma space, but the renewable energy that again seemed to be one of the key favorite stocks in the erstwhile rally. But of course, the rally fizzled out. But would you still have any confidence in any of these names within the renewable energy pack?
Yes, and as I just mentioned, Shakshi, I think a few of the hydro players, not the big ones, smaller players, and
Yeah.
for competitive reasons, I'll not be able to discuss that, but a few smaller players and a few of the EPC players who cater to that. I think this segment is coming up very, very strongly. The tariffs again in favor, they're being backed by CERC and state boards as well. And therefore, within the renewable space, I think this space, this one space, in my opinion, will continue doing well over the next 2 to 3 years.
Okay, fair point. As far as the renewable energy space is concerned, we can definitely look at this pack as well. Let's spot if there is any other interesting theme or name that we can come up with. Let's discuss the auto space, which we haven't touched. Mayuresh, again, starting with you because we have to let you go. How are you looking at the entire auto pack with this talk about, Tesla starting hiring and things gearing up for this disruption, although incumbent players, Mr. Anand Mahindra did say that we have been very much here and going strong with any kind of disruption that has come in thus far, and he seemed not to be too worried. But how are you looking at this entire pack? What are the key issues that still stand as headwinds against the auto space, and what should be the strategy therefore of investors?
So you've already seen entrants come in, right, as far as the two-wheeler space is concerned.
Yeah.
And therefore, I think the premium part of the market, whether it's two-wheelers or four-wheelers, so for four-wheelers, anything about 20, 25 lakhs, that's going to be hyper-competitive if new players come in. But I think the entry-level and the mid-level segment is where I think growth should continue at a decent pace. So I've given you a clue good enough for the investors and markets to probably analyze.
Yes, okay, got that. All right, Mayuresh, then we will thank you on that note for being with us in the morning edition to share with us all your thoughts and ideas. Always appreciate your time with us. So, hoping to see you yet again very soon and hoping that the markets bottom out pretty much soon as well as you were hoping to. Thank you so much for being with us.
Thank you so much, Sakshi. Always a pleasure. Thanks, Mitesh, as well. I think you guys have a great weekend. And I'll forward you the report. I think I've not forwarded you the report that we've carried on that.
Okay, wonderful. It will be great to read that report and give some insights to our viewers there. Thank you so much, Mayuresh, yet again. Mitesh, again, the auto space question I will take up with you as well. How are you looking at the space? There was a time when everyone was talking about EV disruption and what it could do to the entire space. And, there is confusion as to whether the disruption could fizzle off. The entire enthusiasm behind EVs probably seems to be a little dying down. Anything that you want to suggest?
I think, Sakshi, post-COVID, this is the first sector which has seen a vertical rise and a vertical fall. So if you
Mm.
look at the case of Bajaj Auto, and again within the sector, there are too many pockets which are moving here and there. For example, if you look at the way by which Bajaj Auto and Hero MotoCorp has performed on the upside and on the downside. On the other hand, if you see how Tata Motors has witnessed a crack. On the other side, if you look at the way by which Maruti and M&M is behaving. So I think technically it is pretty interesting spot to be in. I think one should go long in Bajaj Auto, Maruti and Tata Motors as of now. We are,
Mm.
as a disclaimer, we are also recommending the same stocks to our clients. So as a disclaimer, our clients might have direct or indirect position into these stocks. I don't have any position in all the three stocks, but I think with a perspective of say 9 to 12 months, if on the large cap side, if there is a sector to bet on, I think auto is the one in which you can go long in Bajaj Auto, Hero MotoCorp, and Tata Motors. Yes, these are the three bets where you can make very good amount of money going forward.
Okay, fair point. Let's also discuss some of the other pockets then. I'll discuss IT with you now. Mitesh, I just wanted to get a sense on whether IT, like Pharma, we were discussing export-oriented sector, tariff talks, etc. But IT is slightly different. How are you looking at the IT pack vis-a-vis what policy changes may take shape in US, and how do the technicals shape up the current picture in the IT space, both in large caps as well as mid caps?
Okay, so as far as IT is concerned, let me start with the IT index and right from the year 2023. So in October 2023, the IT index has made an intermediate bottom at 30,290. After that, it has made a high of 38,000 in the month of February. Then it's made a low in the month of May 2024 at 32,289, 280, and then again a high at 46,000 in the month of December 2024. So what I'm trying to say is that the index is forming a heart bottom formation, and the recent correction from 46,000 to the tune of 40,000 is a very good and lucrative opportunity to get into. But I think one should restrict themselves only to the large cap. So I think TCS, Infosys, and Wipro is looking pretty interesting to us as of now. We are not hopeful about the mid cap recovery because it might take some time. But yeah, as far as large cap is concerned, Wipro, Infosys, and TCS is our preferred pick as of now, technically.
Okay, fair point. I hope this has also helped you a little bit of understanding as to how should you be looking at the heavyweight spaces. Let's discuss banks now again. Anything specifically that catches your attention, Mitesh, here? I mean, private sector banks, PSUs or financials. I mean, like largely it's been the financials, the likes of Bajaj Finance, the way they have been coming back. Do you think there is a lot of steam still left on this space, or is this space only waiting for the FIIs to clearly return and only then will this space outperform? How are you looking at it?
See, as far as the private banks are concerned, Sakshi, we are hopeful on two banks. First is
Mm-hmm.
Bandhan Bank. I've seen a very strong correction, and now the bank is available at 142. So I think over here you have a very good risk reward. And second one, which we like within this space, is RBL Bank. So even if you are looking at the chart of RBL Bank at 165, it is looking again promising. So I think within the private bank, two banks which are up for a very strong reversal as of now is first is RBL Bank and second is Bandhan Bank. Reason of picking up these two bank is pretty simple, is that the risk reward ratio is absolutely favorable looking at the volatility into this pocket. So if you are, for example, comparing these two banks with any other private or a public bank, probably the risk reward ratio as per our system and method is not that attractive. So yes, definitely at RBL Bank and at Bandhan Bank, we are looking for some sort of a buying opportunity as of now, and we will buy in tranches. So probably from here on, even if the stock gives 10 or 15% correction, we will have a cushion to add more. So again, when you're opening up your checkbooks right now, you have to be careful because as of now, rather than selecting stocks, Sakshi, what will generate, which strategy will generate more return is your allocation of capital. So how smart you're allocating the capital matters a lot rather than picking up the stock. So that is what we firmly believe. When any market gives a very strong correction and when any market will bounce back from a given level, the key strategy is how you allocate your capital, not how you select the stocks. So I think
Yeah.
allocation of capital makes a lot of a difference right now.
Absolutely. Very well pointed out, Mitesh. So one has to really look at this aspect when one is looking at the opportunities right now in the current setup for sure. Discussing some other pockets as well. With Mitesh, I wanted to bring up the real estate pack for you. Why am I wanting to discuss this is, of course, this has been one of the erstwhile performers of the past. As an index, it has given a lot of opportunities. But again, is the enthusiasm dying down here? What exactly do you think? Have they run ahead of themselves when it comes to fundamentals? And technically, do you see limited upside onto these spaces? There was a lot of enthusiasm when these, players like DLF, Godrej Properties, Sobha, Macrotech, they were all rallying like how. Of course, pre-sales figures were pretty strong. Luxury segment had been really going extremely strong for most of them. There was a huge demand for these luxury projects, residential projects with 100 crore plus flats getting sold off in just a single day. Those were the headlines that we were reading, and that was the getting reflected in the real estate pack as well. What's your fresh take on some of these stocks now?
Okay, so Sakshi, before we discuss the specific about the stocks, let us have a look at how the index, Nifty Reality Index has performed. So Nifty Reality Index from a bottom of March 2023, from a level of 370, it's a one-way ride to the tune of 1157 in the month of June 2024. So it's a massive up move as far as the stocks and the indices are concerned. So
Yeah.
after that, what is expected? Yeah, fair bit of correction is expected. Yeah, that is logical, and that's what is happening right now. So we are of the view that all these forgotten stories will come back by thumping the table, and we are of the view that sooner than later, reality stocks and reality index will be talk of the town. So we are extremely bullish on this with respect to two stocks. First is DLF at 700, looking very promising. We are of the view that from here the downside is a bit limited, and one can go long in DLF at the current level for the potential target of 850, 900, even though the targets are a bit long. But I think we are of the view that such a big rally is possible. Second, again, is overall reality at 1642. I think it's absolutely a strong case of a trend reversal, and one can go ahead and buy the stock for the target of 1800, 2000. I think a very big rally is on the card as far as reality index is concerned, because the much awaited correction in the reality index has happened, and now the reality index is trading near its very strong support of 800, because the low on 15th of March 2024 was 808. The reality index is trading at around, if I'm talking about yesterday's close, at 855 and made a low of 806. So we have formed a double bottom at the current level. And from the current level, yes, there are strong chances that the index and the stocks will outperform the benchmark.
Fair point. Okay, that's a brilliant idea as to how should you be really looking at the consolidation that's played out, and things may just be ripening up for another fresh rally right there. So one can definitely look at that space as well. Let's look at some of the other pockets too then. Recently there was this entire focus on the telecom space coming back as well, Mitesh. Stocks like Bharti Airtel were again getting into focus. Even the ancillaries into towers, Tejas Networks, HFCL, the likes of those stocks. In this entire week, we've seen some move. Even today, Bharti Airtel is up by about 0.8% odd or so. Your sense of anything afresh that needs to be looked at on the telecom basket?
So telecom sector, Sakshi, in this entire downfall is an immune sector. I mean, if I look at Bharti, I think the way by which the stock behaves, it is like there's nothing to do with the market. I mean, it's a completely different island. Because if you look at the high of Bharti, all-time high was 1779, which has formed on 27th of September 2024. And right now the stock is trading at 1643. So I mean, barely there is a correction. So these are the quality stocks, and when any quality stocks hold its neck out in such a volatile market, it means that the stock is ready for a very big upside. So we are of the view that sooner than later, the stock will cross 2000 level and one should buy at the current level. This is an excellent space you have discussed. I think in Bharti Airtel, probably the entire sector, we are only bullish in Bharti Airtel, and Bharti Airtel should have at least 2 to 3% of weightage of the portfolio because this is the stock which has performed excellently well in the past, spent a quality time in consolidation, and now is up for the second inning.
Okay, second inning could be coming in a 2 to 3% allocation, and the portfolio could be going into this large cap telecom space. It's the only stock in the telecom pack that Mitesh is bullish on at this point in time, and definitely calls for a second inning kind of a move that could be starting after the recent consolidation. So definitely keep an eye out on Bharti Airtel. One more pocket that we can discuss with you, Mitesh, is the PSU space. Again, a space that has been beaten down quite a bit. Do we see any re-rating happening here? Defense were showing some kind of bounces. Railways, again, some order flows are coming back. Power, of course, we were discussing Mayuresh as well, which was overheated. What are you doing as far as this entire PSU basket is concerned right now? The issue was valuations have become frothy. What now?
You have asked an excellent question, Sakshi, at this point of time. See, what has happened, this is our experience of at least 2 decades. Which themes works in the first phase of the bull run is not necessarily works in the second phase. In the second phase, the heroes and the villains and the side heroes are all different. So we are of the view that it's a time for the entire PSU theme, whether you're talking about railway or whether you're talking about defense or whether you're talking about any other stocks. I think a big consolidation will take place. So I think for the second inning, we'll have to wait and watch, and it is going to be a boring phase for the entire PSU space as such. So we don't see any fireworks going forward as far as PSU space is concerned. Probably some moves here and there might excite you, but on the larger scale, it's avoidable theme because it has already stretched. I mean, if you look at the phenomenal run in SJVN or NMDC or Coal India or probably Muscat Dock or Kochi Shipyard, I think now the stocks need a lot of consolidation at the current level, and probably the theme for the next upside will be totally different. So I advise all investors and viewers that one need to be keep aside or don't put your money, fresh money into this pocket. Probably the re-rating will take place after 1.5 year. So if you're putting your fresh money right now, be prepared to wait for the next 1.5 year. But meanwhile, you have a lot of other opportunities where you can make good money. So advisable to avoid this space entirely.
Okay, fair point. So there's an avoid of the space entirely that has really come in. Very interesting anecdote that has been shared by Mitesh. One has to really understand in each rally who are the heroes, the side heroes, and the villains. So one really needs to be stay cautious of the villains that could emerge. Okay. Within the entire PSU pack, I also wanted to get a sense on the commodity space, like you said, energy basket, OMCs is what I could say. Wanted to ask you why, because Citi came out with a report and they actually believe the OMCs could end FY25 on a weak note. Dividend yields could be meaningful lower, and they are actually negative on BPCL, HPCL, IOCL. What are you really sensing here? There is a talk about how IOC and these likes are actually looking at an LPG subsidy too, but I don't know how are they going to be playing out. Technically speaking, purely, how are you looking at the OMC players? Again, is it an avoid space?
Absolutely. So let me redefine what I said, Sakshi. When I'm referring commodity stocks, we are referring to two things. I think I'm sorry I have to elaborate it a bit earlier. So when we are talking about commodity stocks, we are talking about metal and we are talking about agri commodity only. Apart from these two space within the commodity basket, we are not touching anything. Okay. So as far as OMCs are concerned, I think the view remains the same. If you look at the marathon run of ONGC, I think now the stock will correct and spend a consolidation time. So Sakshi, the key takeaway in any PSU stocks, whether it's from the oil and gas segment or from a banking segment or from any other segment, is that now the stocks and the space is ready for a much longer consolidation phase. And as the consolidation phase extends, basically it loses the charm. Okay, then it becomes the forgotten story. So the story will come back. The answer is yes, but after 1.5 to 2 years. So as of now, advisable to avoid even the oil and gas space. We are not bullish on that space as well.
Okay, avoid the oil and gas space and the OMC space at this point in time as well. Okay, the first half an hour candle is just getting formed. Mitesh, any trends that you'd like to suggest for today? For intraday traders, if there is an opportunity, and any stocks that you believe for today one should definitely keep on their focus.
Yeah, so I think the metal space, as we have discussed early in the morning, is coming back. So Hindalco could be a buy right now at 650 with a stop of 640 for an intraday for the potential target of 660, 670.
Hmm.
Second, which is looking promising within this is Nalco, National Aluminium at 197. It is a buy. The stock is up by 2%. So with a stop of 160, 190, sorry, at 196, it's a buy with a stop of 190 for the potential target of 205, 210 for intraday. And another space which is looking promising is the hotel space. So Indian hotel is looking promising from an intraday perspective at 771. One can go long in Indian hotel with a stop of 750 for the intraday potential target of 800 and 810. So Hindalco, Nalco, and Indian Hotel. These are the three potential stocks looking at the first half an hour, looking pretty interesting for the second half or for the intraday, but requesting all the viewers to ensure that you maintain a strict stop loss discipline in a highly volatile market.
Okay, Hindalco, Nalco, and Indian Hotels. Three stock ideas for intraday, but definitely keep strict stop losses in place as Mitesh has advised. Thank you so much, Mitesh, again for being with us in the morning edition and sharing with us all your thoughts and key strategies on several stocks and sectors that we've discussed today. Always appreciate your time and the way you explain to all our viewers with, historical experience of various cycles that you have seen as well as the technicals as well as your own deep understanding of the market insights that you share. Thank you so much. Always appreciate your time with us.
Thank you, Sakshi.
Okay, the Nifty is at 22,842 viewers, 68 points lower, 0.3% down. The Nifty Bank also around 49,000 odd levels. There is weakness that persists. We did see some bounces. Again, it's slipping about to the low point of the day. You can see a half odd percent decline for the Nifty Bank too. Now, of course, when we look at the key sectors, the mid and the small caps, there is a muted trend now. Mid caps have slipped again, 0.1% lower, 0.4% higher for the small caps. So it's a mixed trade over there. Then when we look at the key sectors, you have the Nifty Bank half odd percent lower, autos about a percent lower. You have financial services that are down by half odd percent. Then you have the FMCG down by 0.6%, IT down by half odd percent as well. You have the metal space that's up by about a percent, and the media stocks are up by 0.2% as well. Consumer durables, oil and gas, mid and small caps. These are the points sectors that are still holding up, and metals, as Mitesh also pointed out, he's bullish on. That's almost a percent higher. So some of the stocks there are shining through. Realty, 0.2% down in trade, but as Mitesh said, that he's expecting the space to be probably getting ready for the second round on the higher side as well. But overall, in the commodity space, he only said agri related commodities and metals is what he's looking at currently at this point in time. On the Nifty, let's look at the key stocks. Well, you do have stocks like Eicher Motors that's up today, 1.5% higher. Hindalco, which is also one of the preferred stock picks that Videsh has shared with all our viewers. NTPC that again garners momentum throughout this entire week. It's been in focus. Shriram Finance, Tata Steel as among those stocks which are 1.5% higher in trade. On the lower end, M&M lower by 2.8%, Ultratech Cement, Dr. Reddy's Wipro, ICICI Bank and Kotak Mahindra Bank among those heavyweights that are somehow not letting the market really rally in trade at this point in time. Okay, we will try to probably look at the entire space of how the markets may move throughout the course of the day and get you a sense of how the markets may shut shop this entire week as we track and speak to various market experts. You stay tuned with us onto Business Today Television. The market coverage will continue on various aspects. So stay tuned. It's great to have you with us.
Good evening once again, ladies and gentlemen. This is going to be a very interesting half an hour. And once the half an hour is over, I will tell you something about Hemant ji, which we were discussing off the record. Nevertheless, it was a very interesting conversation. So the digital beast, ladies and gentlemen, rewiring the banking sector. Anybody who's been more than